financial information is very much important. So I told the life cycle cost, present worth, cash worth, break-even point. All this costing term is very much essential while you're calculating the break-even, while you're going for the value withdrawal. So you also need to understand the asset, liability, current liability. All these are financial term you need to understand. What is fixed asset, fixed long-term liabilities. Financial term you need to understand what is the capital stock, paid in capital, uh, income statement, balance sheet. All these are very much essential. Costing also very much. What is finance cost? What is the operation cost? What is the maintenance cost? Inventory cost, replacement cost. So all these costs are very much essential to calculate the life cycle cost. So okay, we will see the example of even this life cycle. Suppose you have three projects. Okay, so using the present worth analysis and analysis method, we need to select the best one. Okay, so when we get the less value, we select that as an alternate. Okay, so break-even point is the point where they don't have any profit or loss. And the main purpose of the break-even analysis is to determine the minimum output that must be exceeded in order to make a profit. So you have the fixed cost, variable cost, sales output, where total output is nothing but fixed cost plus variable cost into the output, and you get at break-even point you normally get the total cost equal to that of total revenue. Break-even point in terms of output is basically the ratio between fixed cost by sales cost minus variable cost. Okay, this is one example. Okay, see the output per month is 1,500 parts. The fixed cost is $75,000, and variable cost is 2.5 per unit basically. Okay, which means you need to multiply this 2.5 with 1,500 to get a variable cost. So total cost is nothing but fixed cost plus variable cost. Okay, and sales price is this much. So you need to multiply this 8 with 1,800 parts, and you need to calculate the break-even point, and you have to find whether is this profitable one or not. If so, what is the profit per month? Per month, okay. Per month means it's basically 1,500 parts. You need to say what is the profit that you're going to get. As I said, the break-even point is defined as the ratio between fixed cost by sales minus variable cost. This is per unit, okay? Sales unit is 8, 8 minus 2.50. So per unit, you get this is the break-even point where if you sell this much product, you will not get any profit or loss. Okay, you will be at least in the safer side. Extra, if you sell one, you will be in profit. Okay, and what is the profit you are going to get per month? Okay, profit is nothing but uh, the revenue what you are going to get minus total cost. Okay, total cost is nothing but the fixed cost is variable cost. Fixed cost is there and variable cost you need to multiply it by. You will get a variable cost. You get the total cost here. And revenue is nothing but revenue cost, sales cost. Revenue is nothing but the sales. Okay, so sales is 8 into 1,500. There is a typo error, 1,500. Okay, or I consider 15,000. Basically 15,000. That's a typo error. Okay, so this is the profit that they are going to get per month. Similarly, for your case, that's why I asked you the sales cost minus variable cost, and sales cost will get it, and you can find out the volumes or quantity, and then from there you can also calculate what is the profit you are going to get and which month you are going to get.